Is it currently time to be buying into Netflix stock? Does this stock have high potential in 2024 going into 2025? This is part of a series in which I'm doing where I've asked AI to give me 5 stocks which have high potential for December. This being the first of the videos, in this video we will be looking into Netflix, of course. So what are the key highlights when assessing a stock such as Netflix? Netflix has been successful in expanding its ad-supported tier, now boasting 70 million monthly active users, with projections of reaching 120 million by the end of 2025. The moves in which the platform has taken, such as monetizing, password sharing, and hosting live events such as the Jake Paul and Mike Tyson fight, have boosted user engagement over the past few months. And of course, we have the holiday season impact. Historically, Netflix performs strongly during December and January, fueled by holiday binge watching as it is cold outside and people want to sit in and just watch Netflix. Seasonal trends suggest an average of 14% gain during this period. This has been over the past 2 decades. Furthermore, Netflix's latest earnings exceed expectations with 15% year-on-year revenue growth. The company continues to capitalize on its global reach and strong content sales. Analysts project a target price of $950 to $1,100, indicating a potential for further gains. JP Morgan, for instance, raised the target to $1.01 thousand, citing robust subscriber growth and improved monetization strategies, of course. However, some analysts caution that the stock RSI Relative Strength Index suggests it may be approaching overbought territory, which could signal a pullback in the near term. Overall, Netflix remains a compelling growth story, particularly for investors looking to capitalize on the seasonal strength and innovative ideas. However, careful monitoring of its valuation is definitely needed as it is entering overbought territory, as we just mentioned. So with that being said, that is a quick overview of Netflix. Let's now jump into the financial figures for Netflix, putting it into my system to see where they are projected to head in the next few quarters. So let's begin this by looking at the liquidity rate for Netflix. So this compares the total liquid cash to the total debt on a quarterly basis. And we are seeing a liquidity rate of 0.08 currently, and it is below 1, which is not ideal. However, it's not something to be concerned with, as it is obviously a strategic move. It's not a sort of move they've pulled out of desperation. Despite this, the trend lines are projecting this to increase, so let's move on to retention. This is exactly what you expect it to be, with Netflix being an online service. The retention rate are above 20 relatively consistently, apart from the Q4 of 2023 where they were down 10, which is when you choose a stock, you ideally want it to be at 10, and for them to be at 10 on a bad day, that shows that this stock obviously deserves its valuation to an extent. So it's very, very important that they are in good retention. And now looking at the free cash flow, they actually don't have a... No, I'm lying. I'm looking at the wrong thing. Looking at the operating cash flow, they are doing perfectly fine. The difference is just a trend on how much free cash flow they're actually spending on such things such as stock buybacks, paying out dividends, or paying out debt, in which they probably spend a lot on, being their liquidity isn't that great. So this is just spare money. Essentially, it stops the company from going into liquidation. And this is looking positive for Netflix again. So now let's take a look at the 365 exponential chart. Here we can see it's basically a trend line to see whether or not we're above the trend right now. On a 365-day chart, we are definitely above it, and it's looking relatively bullish, with the volume looking to decrease and the price looking to increase. However, we are currently above it on a 365-day chart. If we move over to a 91-day chart, this will give us a closer indication on whether or not this is overvalued in the short-term category. And looking at this, we're bang on the trend line, so it is perfectly priced on the short term, which is incredibly bullish. So they have a PE ratio of 5.76, a 52-week high of a massive 941, a low of 461, that being a difference of a huge 479, and we are currently at 914, so we're not massively below the 52-week high. We have a beta rate of 1.27, so that means we outperform on a volatility scale the Nasdaq 1.27 times. and we are currently below the average volume of shares being traded, so it could be seen as a bullish time to buy in. Let's look at this on TradingView to get a better idea. So welcome to TradingView. This shows the moving averages on a 7-day, a 30, a 50, a 100 and a 200-day moving average, and we are currently well above all of them, which is incredibly bullish. This is pretty much what you want to see when you assess a stock. When you're below them, you typically don't want to be buying them. This just shows momentum behind the stock. So currently this is a daily view, by the way, this is looking very bullish. We also have a Omega ratio of 1.93. Ideally, you want to be seeing that around the 3 mark. However, the Sharpe and Sortino ratio is at 17%, which is very bullish again. So is it possibly a good time to be buying in short term? The Sharpe and Sortino ratio shows short term risk to reward, and 17% is relatively bullish. So that could be good for short term gains. However, it is currently Friday and the market closes in about 2 hours. So this video will not be out in time. This video will probably be out on Sunday. Probably, I don't even know. I imagine it will. So this will change. You should check this for yourself. This is free to check on TradingView if you're new to trading. So that's enough about what I think about this. Let's see what the actual analysts think. So the analysts are projecting not a lot of volatility. However, they're projecting a low of $600 and a high of $1.2 thousand on a 90-day projection. I would personally say, after looking at a lot of these, this is actually quite a bullish one. My personal opinion is it will go... Oh, that is not how I think it will go. It will go a little bit like that. I think we're going to see a bit of... what's the word I'm looking for? I don't know. A bit of selling pressure around Christmas time. But I do think overall we are going to see a lot of bullish momentum within this stock. And on a yearly buy, sell, hold, they're saying a buy. It's not a strong buy, but it is definitely a buy, and their yearly target price for this is around $800 on average, that is, and this is based off of 45 analysts. So now we're going to move over to Google Trends. So Google Trends is quite a useful tool when assessing stocks that are primarily online, such as Netflix or Amazon, as it shows the search trends for this stock. And this is showing a 5-year chart on a worldwide, I'm forgetting all my words today, on a worldwide, you know what I'm trying to say. And we can see here that we have a lot of volatility-ish, but it is relatively stable, and it is slightly on a decline, but that doesn't necessarily mean anything bad. It just means that potential new customers aren't joining as often at the moment. But these days, you don't actually search for Netflix when you go to watch it. You just click on it in whatever application you're trying to use. So say you're on your TV, you just click the Netflix button. Or if you're on your desktop, you've probably got it preset somewhere. So this is primarily just for seeing new customers. But the amount of customers that Netflix has is unreal already. So it is expected that it's not going to be growing massively, but it is still steadily growing. Feel like that was a lot of waffle, but I hope you get my point on that. And the interest regions of this are Colombia, South Korea, Uruguay, Venezuela, and Argentina, which is it's a very weird mix. But let's move on. So who are their competitors? I'm going to keep this very brief because it's pretty obvious. You've got Disney Plus, with the strengths being a leverage on a lot of franchises. However, the weaknesses is that they're very focused on family-friendly stuff, and it's very difficult for them to branch out into other series that aren't Disney related. Next up, we have Amazon Prime, which combines Amazon's ecosystem with a video sharing platform, which is very useful to a lot of people who already have Prime. However, there is a huge disadvantage with this, as you do often have to rent out what you want to watch. And then we have HBO Max, with the strengths being its high quality, criticality, and acclaimed content like Game of Thrones, for example, and the weakness being a relatively higher cost. Then you have Apple TV, which is a very premium version of these other services, Peacock, which I've never heard of, and YouTube and TikTok, which are free, but they're kind of not competing. They are and they're not, but for this, let's say they are. But out of all of these competition, Netflix definitely wins as it leads in sheer volume and diversity of original programming. So people will, and it is just a well-known name now, everyone will think, oh, what shall I watch? Let's whack the Netflix on. No one really thinks, oh, let's put the HBO on. I mean, I don't even know what that is personally, but I might be showing my age. Right, I'm going to wrap this video up here as I feel as if I've been rambling long enough. I'm not a financial advisor. None of this is financial advice. So what are my takeaways from this? I think Netflix is a solid stock. I think there will be a lot of sustainable growth within the next year for sure. It's a stock that I will potentially be buying into. I currently don't hold any positions within my portfolio as I sold them all today, but that's unrelated. That's just because I was getting a story for another time. But yeah, definitely I would rate Netflix a long term of a B. I do think it is possibly getting into overpriced territory right now. Although when saying that, looking at the earnings per share, they are still at 17.68, which is actually quite incredible for such a high price. So yeah, definitely a B long term, potentially want to put it up to an A, but I'm going to leave it at B. And short term, depends when you get in. Right now, I would also give a possible B. So thanks for watching this video. I hope you have enjoyed. Please do check out the other videos of these AI recommended stocks where I break each one down. They might not be out by the time that I'm uploading this one, but if you're watching the other ones or whatever, just go look at my channel, please. It'll be greatly appreciated. So please do leave a like, subscribe, and I'll see you for the next video.